Morning, and welcome to the Amati Innovation Call, the Insights Call. I'm Graham Benke, and I'm joined today by Paul Jordan. Before we start, I'd just like to bring your attention to the disclaimer slide on your screen, which is also available on our website. The main point to note here is that nothing we mention today constitutes investment advice. So any comments about stocks, funds, or even commodities in this case. Important always to do your own research. But with that, welcome again to the Fortnightly Insights Call. And the purpose of this call really is to share our thoughts on a topic that we find interesting, at this time, and we think is of importance to us and to our clients. If you have interest in a particular subject, you can let us know either through the website or through your usual Amati contact. So the format will be the same as usual. We'll speak for about 10 minutes and leave some time for questions at the end, but it'll be short and sweet. And if you do have any questions, there is a box at the bottom of your screen where you can add them in for us. So today's subject is about the development of lithium and EVs in particular, and this really comes to us through our innovation frontier of energy transition. So often we talk about energy transition at the upstream end, where we talk about the change to alternative energy sources, and last week, for example, we spoke about nuclear, and this is an area we're very interested in and we have a number of investments in. But today we're talking about the other end, the downstream part of the market, how we're using the electricity we're producing. Obviously, you're all aware that we're trying to transition away from natural gas in a lot of places, and we're using electricity as a substitute. So for things like heating our homes and cooking. But the really big and significant change is in transportation, where there's been a huge rise in the number of electric vehicles that we're using around the world. And that's particularly true in China, and we'll talk a little bit more about that. But the rise in the demand for electric vehicles and hybrids has led to a subsequent huge increase in demand for battery materials. And the really notable one here is lithium. Lithium is an interesting commodity which has somewhat limited supply, but as you know, as a result of this trend, very significant increase in demand. And as a result of that, the price of lithium has increased dramatically over the last couple of years. If you look at a chart, it's in fact the last couple of years about almost 10 times increase. So that's attracted a lot of attention, obviously, from companies that use that lithium, particularly the auto manufacturers, the OEMs, and they've taken an unusual step of trying to access the commodity directly from the miners, rather than using a normal sort of supply chain. And so that means they're either using offtake agreements, or in some cases even trying to acquire directly mining resources. And the reason for this call, really, this session this week, was the rumor that Tesla is looking to buy a mining company that's held on the strategic metals fund called Sigma Lithium. So we thought that was an interesting and notable point. And at this stage particularly, it's interesting in the sense that there's a lot of hype around lithium, and yet the lithium price has started to come down recently. And we've also seen a bit of a reduction in demand in electric vehicles in China, where they've reduced some of the subsidies and incentives around the products. So we thought we'd dig a little bit more into that, and particularly the lithium, some of the trends in the lithium market. So over to you, Paul.
Yeah, thanks, Graham. So I've got the unenviable job of just explaining a little bit about lithium pricing and lithium production. So lithium pricing is quite confusing, because the price that you'll probably read about in the press is for the finished chemical, either lithium carbonate, lithium sulfate, one of the chemicals that goes into batteries. Along the way, we've got lithium ore, which if it's concentrated, lithium ore from hard rock, known as spodumene, comes at about 6% lithium. And then there's something called LCE, which is lithium carbonate equivalent, which lets you kind of compare the price of other forms of lithium with lithium carbonate. So, and there's also three sources, three inputs into lithium, three principal ways it's produced. One is from spodumene, which I mentioned, which is in many ways the best way of producing lithium, because spodumene is the most concentrated form of lithium in the environment. That it's the most concentrated kind of ore. It comes at 5–6% from a good deposit. Then we've got brines, lithium brines, where lithium's already dissolved, and that comes at about 0.7% concentration, so quite low concentration. And then relevant to today's discussion, we've got something called lepidolite, and lepidolite is a kind of crystalline kind of rock that has a very low concentration of lithium, 0.2, 0.3, 0.5, up to 0.5%. And a lot of the Chinese production, and this has been in the press recently, which is the reason for mentioning it, comes from lepidolites in the north of China, around a city called Yichuan. Last week, to quite a lot of headlines, China intervened and shut down some of the illegal mining that's going on of lepidolites. And we've been speculating a bit about why did they do that? Why did they do it then? And the problem with lepidolite production is it requires very concentrated acid. It can have some bad runoffs because it's not concentrated. It uses a lot of energy to process it, and it was causing some pollution, causing quite a lot of pollution. And a lot of the mining was going on without licenses, so the Chinese authorities stepped in and shut it down, and they've reopened the mines with licenses now. Like everything to do with the energy transition, we very quickly get back to big debates around China, and China has become massively dominant in almost everything to do with the energy transition. They've really captured the industries which are going to supply materials and products into it. And lithium, this is very true of lithium as well. They completely dominate battery production. They also completely dominate processing of lithium into lithium carbonate. And of course, what we've then seen in the last year, maybe 18 months, maybe a couple of years, is the big question mark arising in Western manufacturers like Volkswagen in your portfolio. Where are we going to get our raw materials from if it's not going to be just China? Or can we even find a solution where we don't involve, we're not dependent on China at all? This has become a huge topic across many industries, and lithium is absolutely no exception. So just one final thing on this thought. When I was doing a bit of research for this talk, I came across a note from 2019 talking about the lithium price, and saying that Goldman Sachs had just produced a note saying that a little bit more lithium production and the price would start plummeting. It's just risen in 2019, and of course, the problem with a lot of what we hear and read in the stock market is it's very short term. So yes, short term price came down. 2020 pandemic shut down quite a lot of production fell, and since then demand has really begun to take off. And as maybe you can come and talk about this background, that the OEMs have really big plans to up the numbers of pure EV, pure electric vehicles going into the market, and the lithium has to come from somewhere. So Mark, running our metals fund, is doing the calculation. Yeah, in the next few years, there's not enough lithium production. We need these new mines really badly, and therefore the price is going to fall of lithium in all probability because it's spiked out of all proportion. But is it going to find a base level? Is it going to level out at a price where mining remains a very profitable activity? This is one of the sort of conundrums and big questions. Mark clearly thinks it is going to, and I think that's a very it's a stronger sort of medium-term view to take. So yeah, maybe Graham, you can tell us a bit about the OEM plans for increasing EV production.
Yeah, I mean, it's an area that we're directly invested in, as you say, through Volkswagen. And the reason we like Volkswagen in this particular sense is that there is an element of uncertainty, as you say, about the rate of growth of EV. I mean, there were people drawing very steep lines just a couple of months ago, which have now come down a bit because of what we've seen in China and what we've seen elsewhere in the world as EV rate of growth has slowed a little bit. And what we like about Volkswagen is that it's in a sense a bit of a hedged investment on this side. So it's made huge investments in EV. It's grown its own EV sales almost 25% in the last quarter. But in a way, it doesn't really matter to us what the rate of growth is, because they have a very strong traditional internal combustion engine business, as well as a plug-in hybrid side. So in a way, if the transition is slightly slower than we think, then that's positive for their margin. They don't need to keep investing in the older traditional side of the business, where they're still very strong. But if the EVs take off much more quickly, then they get that benefit with their new product range. So we like it. And a lot of that growth is, we think, really not priced into the stock. And in fact, we saw that last Friday when they reported, and the shares were up nearly 10%. But yeah, it's still a very uncertain area, we think, in terms of that rate of growth, and trying to be too fine in the way you judge it is complicated. One of the things that we probably don't have much time to talk about today is the infrastructure investment that's required to support all of these EVs. And just to give you a very small snippet of that, in the UK, the National Grid says that just to put 50 fast charging sites around the network, the motorway network in the UK, could cost up to £1 billion. And if you contrast that with the 8,000 petrol stations we have in the UK today, it gives you some idea of the kind of infrastructure investment we're talking about. So there's a lot that needs to happen, and there's still a lot of uncertainty. But it's a fascinating area we're quite invested in through a number of different things. I think in the interest of time, we should probably just look to questions here. We do have a question.
There's one question come in asking whether old lithium batteries can be recycled to extract the lithium, and is there a listed way to play this trend? The answer is almost certainly going to be yes to that question. Recycling will emerge as a clear theme here. Looking at the sort of forecast for lithium production, this is not really something that's going to be a big feature until around 2030, because obviously you've got to get the first generation of batteries into the market in big volume, which is kind of happening, and then they need to wear out and before they're recycled. So I imagine towards the end of this decade, recycling will become quite a big theme. I've come across one listed company that was involved in it, and I'm sorry I've forgotten the name, but I'll try and come back on that point. And just a thought to finish with here, because that's the only question come in. We're in the era of what I call the grand pronouncements, really, of the energy transition, where governments are saying, by 2030 we're going to stop internal combustion engines being sold, we're going to stop you buying gas boilers, and sort of legislating to bring about energy transition. Unfortunately, everybody knows that that approach on its own is absolutely not going to work, and we are at the moment far too reliant on the grand pronouncements from government, because obviously it feels like there's votes in it. It's going to require really detailed and joined up policy thinking and investment in the right infrastructure. Just taking a step back, what energy transition is a sort of almost a euphemism for a massive industrial revolution that is required to bring it about, without which it just simply won't happen, and any amount of legislation can't make it happen. And so the investors have this conundrum of, to what degree do we commit capital to bringing this about, and we're not quite sure if the policy support is really going to be there, and is everything just going to be late? And if it's late and you're an early investor, that's pretty killing. And it's the same with mining. So relatively the amount of investment in mining is low compared to the amount of investment in other parts of energy transition. That's clearly not sustainable. But mining is a very long-term business, and to get the mining capital to commit, you need the clear policy support. So what I'm hoping, and what I think we all need to hope, is that we move into more of an age of beyond the big pronouncements towards detailed hard graft policy, which convinces everyone, yeah, this is really going to happen. And the will from the companies, the big corporates around the world, is absolutely there. And now it requires the policymakers in a way to step in and provide that support and that clarity.
Brilliant, great. I think that's a great place to finish. So thank you very much for joining us, and we'll see you again in 2 weeks' time, same time. Thanks very much. Bye-bye.
Bye.